Hello, everyone. Hello, everyone. How are you doing? Just going online with Facebook Live, and that's what I'm doing right now. Hello, everyone. Welcome. How are you doing?
Hello.
Bear with me. Hi, everyone. How are you guys doing?
Hello, doing great.
Good.
Bear with me. Hi. How are you?
Good, thanks.
So I'm just give me a couple minutes while I'm just making sure that Facebook Live is on as well, and we restart. So in about 5 minutes. So, how everyone? How are you guys doing? Can you guys all see the screen right now?
Yep, no problem.
Everyone see the
Are you sharing a screen? Because I see the participants, but I don't see your screen, if that's what you're referring to.
and my journey is very simple. I started going online with people on setting up meetups, setting up events, and I've been hosting 30 plus events and talked to over 2,000 audience. So so I've been also on different publications and some of my lectures, and you can see it's up there. So I'm continuously improving what I can do on the real estate game. But you know, today's reason is not about me. It's about I really start doing this, and I really start doing this early last week. And you know, as I see on the news, and you know, one thing that I do really want to put out there is, you know, how do we keep on our life? You know, how do we keep on our life with everything that's going on out there? I'm hoping today's, you know, I'm giving some nuggets as in why we're doing it, but really, I want to leave some positivity out there. and that's my number one goal. I want the people around me, and including myself, to be able to come out stronger. And while everyone is worrying about situations, that's number one. And I want all of us to be more prepared. That's really too much of us are really worrying about what the situation is. Even we're affected financially, we're affected physically, and hope that no one's on the meetings is all have family and friends, or even yourself is personally affected. But that's really serious. The world is basically put on a pause. And but you know what, as entrepreneur, we are always trained to be and rewarded to be look at the positive, look at what we can do. So I want to be more prepared after this, and you and I know this will be passed. And there's no secret about that. This will be passed, whether it's 3 months, 6 months, 2 years, this will be passed. So I want us to be able to come out stronger. And last but not least is, of course, like now everyone is staying at home, and this is just a perfect opportunity to share some free informations, as in how you can prepare, just like anyone, just like you and I, we have so much time now at home, and how do you take advantage of it? And I do think that we have a lot of opportunity to take advantage of while everyone is staying at home. And you can research online, you can research at home, you can look at the negative things, but while everyone's looking at the negative things, you can look at the positive things. And that's what I want to do with this weekly Wednesday Zoom call. So again, putting some positivity out there. I want to reassure you, the world is not coming to the end. And it is, we all know, and I want to show you, I want to leave it to you with some of the positivity, as in what is the world is doing. And what we can do to, like, what we can actually, to give you some nuggets as what we can do while we are seeing the latest developments of and you guys, some food for thought that you guys can bring it back and think about your future. Some of the big questions is today, I really want to flame it to is, I always talk about cash flow, and of course, is the number one thing is, can you still cash flow, right? Can you still cash flow with apartments, with real estate in general, maybe? And and then number two is it really the best opportunity right now? We are into this in North America. We lag behind the Asians. China, Korea for about a month and 45 days in terms of all this development, pandemic so far. Is it too early? Is it too early to invest, or is it really right now is the best opportunity? So we're going to talk about that. And is it a way that you can learn, and I guess what the steps you can do right now? That's not going to be you don't need to go out there, and what you can do staying at home, and what you can start. And I really want to touch on that as well. So cash flow opportunity, I want to state it out loud itself. It hasn't changed. It hasn't changed. It is still the world. When we talk about cash flow opportunity, that's still the things that we are looking at. Can you cash flow? If you are with me, if you're with me, so I always talk about cash flow opportunities. Is the cash flow opportunity changes? What is the fundamental of the market like itself? Has it changed or not? No. So if it hasn't changed, so what you can find in the market previously, 6 months from now, what you can do at home to go find the market and talk to the brokers and find cash flow opportunity, it hasn't changed. What in fact has changed is some of the borrowing requirements has been improved significantly or like crazy. The rate has been go to zero. I know that the fact that the spread, when we talk about lending professional, the spread hasn't given 100%. When they lowered at 1%. It hasn't go all the way to zero. I mean, I was talking to my mortgage brokers. The interest rate, even though the government lending rate is go all the way to zero or close to zero, it hasn't really go. It's hovering around 3.5 to 4. And talk about commercials in U.S. And I just sent an email to my mortgage broker and basically getting the update. He's going to let me know. But the cash flow itself hasn't changed. You're still able to research your market at home, arguably better, because now everyone is in this panic mode. Think about this: if you're an apartment owner, now this is a crazy time for them to, first of all, to own properties, and second of all, I am an apartment owner. So I own apartments, I invest in apartments. So this is one thing that we are facing it right now. So typically, apartment industry, so real estate industry, lag about the whole environment 30 days. 90 days and up. So you're not going to see delinquency coming up as if right now. Arguably, this is much quicker and much sharper than what we have seen in 2008, couple of the seminar, and they talk about the comparing about the GFC, the Great Financial Crisis crash in 2008. They also compare about 2001 and comparing with this one. So I have one slide that really comparing basically what the government has been doing on 2008. Comparing to what we're seeing right now. So we're going to jump on that. So, but coming back to that, you can still find the market, you can still find a cash flow property, if not better, and invest in those cash flow opportunities. Even though and the market has changed. So, the apartments market is going to correct it a little bit. There's no doubt about it. Whether it's going to be corrected the way that we have seen in the stock market, 30% and up, we do not know. Some of the stocks have actually go even further down to 50%. Oil price was at $19 before it bounced back. So, but number one thing is the cash flow market hasn't changed. If you can able to find cash flow opportunity before, if the properties right now is going to correct it, and it will be corrected, so it is just better for you if you're able to lock down the market and find the cash flow properties, because there's going to be a lot of owners that wasn't managed well, and not managing the cash flow management well, and they're going to have problems. And I know that has been lobbying groups, because I was in another call, and this has been lobbying group that coming out with help potentially to help all these landlords that not able to pay the debt services when the tenant's not paying them. But this is still real early. But one thing I want to reiterate is the cash flow deal, that if you were doing cash flow opportunity, which I always tell people, stick on cash flow, because that's only one thing you can bank on. It hasn't changed. So I want to leave it to you that. So I said that we are not living in the utopian world. As a real estate investor, we really have to sink in what is happening out there in the market. The truth is, the market have corrected itself. We may have rebounded yesterday a lot, but we are seeing up and down all over the board, and it's really volatile. But the best thing is we really have to looking at what we have learned, I think, and in the past great crashes in 2008, and maybe look at what we are doing right now, and listen to some of the smart people that they are actually talking about. So I saw on Wall Street Journal news, and this numbers has already outdated, by the way. This has changes on the daily to daily level. This news reporting talk about comparing the 4 big things that we are different in terms of the response to this crisis. And I think I'm going to just play it and share.
We are living through unprecedented times. The period of the coronavirus coronavirus. You know, this is a crisis that has raised problems we've never dealt with before as a society and raised a lot of difficult questions. Some of those questions can't be answered in the midst of this crisis, but maybe some of them can be. So that's what we're going to try to do here. Take a question that's probably on your minds in the midst of this crisis and see if we can come to an answer. Not just me, but me using the help of my colleagues from around the Wall Street Journal. So let's start with this one. How is the big bailout that Congress is trying to put together now, the rescue package for the economy, different from the last time we had this kind of situation in the financial meltdown of 2008 and 2009? Well, I think the rescue package now came together in October of 2008, and then a big fiscal stimulus package in the early part of 2009. So there were 4 months that passed while that package was put together. The package that we're dealing with now, which will really come in 3 different pieces, that will come together in 4 weeks. So it's going to be a much faster job, which worries some lawmakers a little bit because they'd like more deliberation. Secondly, this effort is going to be much bigger. If you put the TARP and the stimulus together from 2008, 2009, you had about $1.5 trillion in a rescue package overall for the economy. We're talking now about a package that, when it's all said and done, will be closer to $2 trillion. Third, this time there are going to be more strings attached. I think there's a feeling in retrospect there should have been more conditions attached to some of that financial industry aid that went out in 2008 and 2009. This time Congress is going to try to deal with that up front. So there are going to be some conditions. Some of the money that goes out in the form of loans, not grants. There will be requirements for businesses to use the money the way Congress intended and the way President Trump intends for other purposes. And finally, more of the help this time is going to go to average people as opposed to the businesses that are trying to stay afloat. There's going to be plenty of both. But there's a concern now that the real hit in the economy is that consumers are going to run out of money, can't pay their rent, can't pay their bills, can't go shopping, can't do the daily things, and that's what's dragging down the economy. A real effort this time, I think, to make sure that a lot of the aid goes to average Americans where they live, not just to the businesses that they frequent. So there's some similarities, but big differences.
So I think that was a little bit of technical difficulty while so everyone's in now. Just want to see that everyone's is in. So we just played this slides because so they talk about 2 trillions. So by the way, that's if you pay attention to the news yesterday, the total package has already surpassed the 2 trillion mark, which is already past what it was supposed to be on 2008. 2008, they delayed it, the package for about a year or 9 months, and they really separated in 2 parts. And now they are doing it in basically in total is like they're trying to get this out in 2 weeks. More realistic timing is probably in about 3 weeks to to 2 months. And they really talking about 6 trillion. And if you think about the U.S. economy, it's about 21 trillion. And they really trying to crank up in doing this. And the second slide that I really want to show it to you is this. This is the slides that I always pay attention. Even on my meetups, I always pay attention to these slides because when this is basically, let me back up a little bit. So this is the Federal Reserve balance sheets. So if you're familiar with how U.S. create the bonds, create the loaning, basically every U.S. dollar when they print a U.S. dollar, and start from the last century is basically they're backed with one treasury bill. So basically when they issue a treasury bill and they back it with that's when the time that we can print a dollar. So this is basically is online. Everyone can access to this, and I look at this all the time. And let me know if you need access to this, or you can just go Google Federal Reserve balance sheets, and then you look at just the latest one. And so I always look at this because it tells me what is the government is doing, and the actual balance or actual position. And because they only release it every Thursday, but it's is a really good way to actually look at if the government is doing what they're doing. So you will notice, and notice in 2008, just positive that the sharp increase on, I'm going to see if I can go on and point that to nano remote control. I don't know. Here we go. So this is the time that were last time that was suddenly increased by Obama doing the top and increase the buyback and the market to support the market in general. And and we go through the years, go through all the ways, 2014 in continuously expansion. This is the second time when the Federal Reserve come up and is keep buying all the assets, supporting the stock market. And this is the basically required time, basically that we're not doing a lot. We were in 2014 all the way to 2018-ish, and this is the time that shortly after the Trump have really because Trump 2017, 16 they have this tax program basically, and that has the economy, and that was the time at 2018 and basically go all the way down until this is the time. This is an inflection point of 2019 where September, where we call it report market. Basically they started buying report position, basically supporting short-term lendings from the liquidity point of view. We're not trying to be a financial professional here, but we are really all connected in this financial crisis. So that's why I want to show it. And the last thing is, I hope if I can change the color. It's this one. It's this one that I'm actually talking about. So this is about a week, and you look at this is about we are at this point right now. This is probably already dated. So we already surpassed the last plateau, which is 4.4 trillion. This is 4.4 trillion. And so if what the government's saying is true, the reason why I want to show it to you is if the government's saying is true, you will see this 4 trillion mark go all the way to past 5, 6, 7, and 8, and really soon. And we all really need to be careful in terms of what government is doing. But at the same time, we are really dealing with this crisis in terms of financials, in terms of health, and from investment point of view, that is the time that we need the government support. And I always come to this graph, and basically is retrospective, it's historical, but this is time that you can always looking at whether the market is supported by the government, because when the government give out more money, first of all, they give to 35 banks or 30 banks, and to support the financial market. They want them to have liquidity, first of all. And then the bank will support the businesses, personal loan, housing, mortgage, and all that. So that is a really good indicator if the Trump's administration is actually doing what they say. And I expect that you looking at this, you already know that they're doing it very quickly. Not in the 2008, just after, months after the program, after the actual financial crisis, the GFC. So next slides. And I want to sing it to you because this is slides that is really make it bigger if I could. So I'm gonna have to raise it quickly. So this is slides that talking about the GDP is doing in terms of I'm going to take some time, and I don't want to confuse all of you guys here from the last slide. This is the time from my when I was online, and this is the Cushman and Wakefield. And for all of you guys that familiarized with them, they're the top 5 real estate company in the top. And big drop in the Q2, we are going to hack in right now, and at 10.8, I've seen different results that talk about 10% to 20%, because every one of us is staying home, no one's working. So that is the Q. That's the Q. We're the end of Q1. We are going into Q2, and that's what the projection is. But what I really want to sing it to you as in what is it actually doing. So if on the Q3 and the Q4, and this is all over the board. This is not one or two report. We're talking about 2 or 3 reports coming out. Some of them is like 20-30%, just because of the government money is coming in so quick and so fast and so large in comparing to the financial crisis that we will have. So so they're looking at 3.2 on Q3 and Q4 is 14.5. We really cannot really look at one data specifically. We really cannot look at just this guy saying this and this. But the fact is, we are still in this crisis, and no one really know what the outcome is. But what we can do as a real estate investor, as I always say, that you won't. There's nothing to stop you from looking at this. In fact, people need to sell right now. They're in trouble. They're going to need to sell. And think about all this foreclosure that's potentially coming up if you're preparing yourself. So I'll leave it to you so you can think about that. And another slide is, the program from America. We talk about 5.4 trillion is already going up. So and US has passed 2 billion, and Canada has passed another bill of 82 billion, and Asia Pacific wise, and the Bank of Japan has been coming with the package, and China has put in a further package. This slide says 394. The data that I see is actually double of that, because they're doing much more construction projects at this time. And you look at Europe, and the UUB have ramped up the aiming package 750. So don't get me wrong. So all these numbers changes, and it does changes. But I think when we're looking at, we go back to this slide, I say, looking at current and look at the history and look at what, what the smart people has been reacting to. Don't listen to one sources. Don't look at, don't look at just don't go into just one website and look at the data and really look at, trying to digest the information. And, look at, when you look at the pandemic itself, I would also suggest you don't looking at just, one media. Look at how many cases we have. And, I'm not encouraging you to be all doctor. And in fact, I try to don't watch too much news. I get my updated one time in the morning, one time in the afternoon, and that's it. Because you really have to, if you're a real estate business, and has been still talking to brokers on a daily basis, because to be honest, now is the best time to buy. If the people need to buy, there's a lot of people who are holding off selling. That's true. But the thing is, the transactions has to keep going on, and the people were trying to sell. Just take a couple of real estate investor, for example. I was talking to another investor. They're trying to sell. Right now they're going to need to hold off and think about if you prepare, if you're creating relationships right now, and you're going to get the deal flow. And I always talk about on the meetups on the deal flow. You have to create a relationship with the brokers to create the deal flow. If you only start working on the deal flow at, let's say, September, when everything's settling down, the crisis is already gone, and there's no, to be honest, you're going to be lose to people who are able to do it right now, to able to do the deal flow right now, raise the capital right now, because you just have 6 months heads up. You do the work right now. So I said that I don't want to be a doctor, but I find this slide is very, very encouraging, because I'll share it right here. And this is a slide that I really want to share with you, because it's actually talking about the cases on, can you guys all see the slides here? So this is a slide talking about the current pandemic. It's going to make the slides smaller. This is bigger. So this is the case from the Asia Pacific area, and this is not including Europe, and this does not including US. And this is the thing that they have been recording since January 23rd. And that's where they change the requirements all the way up. And really, regardless, if you watch the head news, it's going to be really depressing. But if you look at this, this is what the China has been doing and South Korea has been doing, all this quarantine and things like that. So really has been stabilized. There's new cases still coming up. My heritage is in Hong Kong. My family in Hong Kong, they tell me that there's a lot of students coming back from Asia, from all the way to the world, back to China, back to Hong Kong. And it's going to be potentially increase the second wave. They call it the second wave of the pandemic. The truth is, this is a really fluid story, and that, and the media has been reminding you all the time, and we don't know. It depends on a lot of things, depending on how we're doing on social distancing, depending on are we strong physically in the world, how old is our people in the country. But I'm gonna leave it up to you, because I think that's reason to be optimistic, because if other countries can do it, if we're doing something similar, we can possibly do it. But I really said about on all my meetups is you can listen to all the news, but the fact is the hard work underneath that you can still research in the market, and you can still raise the capital. And right now a lot of people focusing on the time on all the news is bad, it's going to affect my job, and I'm staying home with kids, and things like that. The fact is you can still do all these steps to a degree. You cannot go on site to look at the properties. I know that's travel bank, but you cannot meet people to raise capital on a coffee basis. But that's the time, to be honest, I think, to expand, to research the market, to raise the capital, and do what you can do online, to touch up to your contacts, and negotiate. I really want to highlight that on the next slides is negotiations. Now the people who is going to have the deals out there, they're going to be much more willing to negotiate, or you're going to have a much higher point to negotiate. The reason is this: the cash flow is going to go down. And this one slide I didn't include that is talking about from all the way from hotel hit to 60%, and then the news I was reading online is the hotel industry, they were in terms of occupancy, they go all the way to single digit. There was 70% occupancy for hotel. Apartments wise, we have seen slowly increasing, because we're not going to see, we got hit in America about 2 weeks ago, and that time the March payment is already paid. So the March payment is already paid in terms of rent. So we're going to really know in about today's 24th, 25th, and we're going to know in about 5 to 10 days where are all the delinquency coming. As you, as a real estate investor, you're going to feel that. But as I said, if history is right, we're going to see this in 90 days lagging times for the whole market. But the positive things that I want to leave it to you is people still need to live. Of course, when the jobs hit them, that's going to affect the ability to pay the apartments. But they're going to first of all, number one is going to be people are cutting down on retail. People are cutting down to the traffic. People are cutting down on gas. All this money is going to be help them, not including the helping package from the government. They can help them to pay the rents. I'm not saying right now, coming back to the first slides, I'm not saying that right now go all in. I'm not saying that I asked a question: is it an opportunity, or is it too risky to do it right now? I think it's too risky not to expand right now, meaning that to do all the work that we are just having this big correction going down right now. And I think it will be too risky if you not think about what the 6 trillion of government money, including if you talk about the whole world, it's going to be probably 10 trillion or more, and the number has been keep increasing of the package that the government is putting out there, of the potential rebounds, and after that, when all this money kicks in and all the help kicks in. So I think it's really risky if not you don't start doing the legwork and start educating yourself. I'm gonna leave it really easy out there, and I really cut this part short last week. I have a kind of whole session as in what I think you should do to make your day better, because everyone's, you know, we're in this new normal, by the way. We're all stuck at home. We're really trying to find what can we do. But you know, this is what I do daily basis. And I think a lot of people has been doing, which is great for you guys. But you know, really, what we're trying to visualize what you really want to do in about 6 months basis. Visualize your plan and then your daily basis. Can you, like, if you really want to join do real estate, I think this is the best time, because you know everyone's so quiet. The competition that I really haven't talked about, the competition is really go down, because you know many people has been just, you know, they really retract, and they really stop doing the marketing. They really stop doing the expansions, and this is the best time, I think, to create some routine and find a group to join. This group, other online group, and trying to keep the social factors going, because we all really social human beings, and you know, we just in about a week or so we've been told to stop going to the office, and we stop going to coffee shop,
Why cannot do
and we stop going to all these locations, and we really have to find an equilibrium, as in how we can cope with this. You know, last thing I'm gonna leave it to you is turn off all the notifications. And by I mean that is, like, you know, we all have so many Facebook notifications, email notifications, and calendar notifications. I encourage all of you to shut it off, because you know what, I'm not saying it to be totally turned off to the wall, but you know what, even though, you know, I used to say that the world hasn't changed that quickly, but you know, the world has changed really quickly nowadays. You know, I don't check my Facebook Facebook messages every hour, and I don't check my email every hour, because you know, to be honest, it give me anxiety, and I think we all have to be really careful here. You know, when you look at the news every hour, and you know, that changes, you know, to be honest, sometimes every 10 minutes or 5 minutes you get news on how many cases in Europe, how many cases in Canada, how many cases in US. You know, do you really need that? You know, that's what I'm thinking. Do you really need to be do you really need that? Do you really need that? And you know, I just leave it to you. But you know, leave it. Finally, I want to say that, you know, what can you do as investors? You can learn how to invest. You know, it doesn't have to be apartments. You can learn how to invest in real estate right now. This is the best time. When you stay at home, we look at all this market. You can learn how to do that. And can you can invest in your educations. You know, if you're new on educations, you can find other people that's been doing this for a long time and see this as an opportunity to take advantage of that. Attend the meetup like this. You know, two things I mentioned it here down here is like finding deals daily. I apologize. The call that is calling me is actually the broker that I leave a call to him yesterday. I asked him on one of the deals. So so the deal flow hasn't stopped. You know, the market may have gone to a pause. Everyone has been going to pause. But the fact is, I do know, you know, the liquidity has stopped quite a bit. But I do know the deal flow hasn't stopped, because people who need to sell is keep coming. The people who are going to keep working on the deal flow, if you are like me, you will still getting deal flow coming in, and raise the capital. Do the best that you can. You know, everyone is really, think about creatively. Everyone is stuck at home, and if you are positioning yourself as the investor to be on the positive side, no. In fact, I just will position myself on that front, and but more on that later. But think about what that does to you, to your business, to yourself. Everyone is always talk about supply and demand, by the way. Supply and demand, not in the apartments point of view, but in terms of yourself as, I call it, let's say, human capital. If everyone is investing the time is to, you know, the case is really bad, you know, and I don't know, we don't have jobs, we ever stuck here. You know, I'm talking about the supply of negativity. And if you position yourself and supply and demand. I'm talking about supply positivity and supply and negativity. The supply of negativity on the markets right now is just go up to the roof. In supply and demand economics, it's really simple. If you are one of the supply of negative news, negative news messages, you just becomes one of the mods in the market, and you're not doing yourself as a real estate investors, even if employee or employer, it's not doing yourself any good, because you're just one of the persons that actually keep telling them, and you're just one in the millions, by the way. That's basically what it is. But if you position yourself on a positive front of no, if you are still educating people and what you can do on real estate front, but it doesn't matter if you're real estate. If you're on the stock market, it's actually probably the same. The Dows have corrected 10,000. So maybe not in the front of invest today and things like that. But all I'm saying is you don't have to be the negative side. That's enough negativity out there. And I do think by being the positive, around your colleague, around your friends, that's going to position yourself way better, because you know what, the world needs some more positivity. And I think we all can do that by not sharing the negative news. You need to be informed that you position yourself, but at the same time, I think that's a tremendous amount of relevancy if you position yourself on a positive side of notes, and you still creating the deal flow, still talking to the investor actively. Think about this: 6 months down the road, 3 months down the road, you think you'll be more useful, or your competition will be more useful if your competitions is sharing all the negative news, and they're not doing all, they're not creating deal flow. That's the biggest thing as a real estate investor. You're not creating a deal flow. By the time, this is the best time to buy. This is the best time to look at all this news and create opportunity for yourself. And I do, and on that note, and I do immerse myself with, I host boot camp online, I host self-training, and that's just the best time to create huge amount of effort. I'm creating my online platform to teach people how to do real estate investing, commercial real estate investing, apartment investing, and I'm doing monthly meetups. Now it's changed to online monthly meetup, and I'm still doing this Zoom call. This is a new thing. So learn how to think about yourself and push positivity out there, and because with that, you basically create your currency for yourself, as what I call the attention currency. So I'm gonna leave it up to you guys. This is just a couple of slides. I'm gonna leave it to so are you guys welcome to ask questions. But I intend to keep it on a weekly basis, and I think I already unmute all you guys if you guys have questions. Are we still like, just wanted, because we have so much, one thing is like, I tell you guys to focus on positivity. You notice that too. I have so much technical difficulties when I'm going through this, and I'm just keep on and meeting all you guys, and you guys, very good, doing very good. You guys keep hanging in there. It has been, and if I see you guys next.
Are you taking
go
questions?
ahead. Just unmute you.
Oh.
Yes. I'm taking questions. Maybe I mute all you guys. Oh, sorry. I think let me unmute all you guys. Okay, you guys can talk now. Sorry.
Okay. No, so first off, I want to congratulate you on coming on the Zoom platform. I realize that this is, you're at the early stages of coming online, and there was a lot of technical issues. And so, you know what, like anything we do, right? You have to learn it, and it's a learning process for everything. So good for you, Howard. And it's nice to see you because we met a couple of years ago in Toronto, and we're in the same book with Brian Tracy. So it was really good. So I did want to ask a question because I know that you're heavily into real estate like I am, and I wanted to just, yeah, exactly that one. So. So I guess I'll tell everybody that the people that are on the call, if they don't have your book with Brian Tracy, they can get a copy, right?
Of course.
Okay.
Of course. It's actually on my website.
Yeah,
Send
exactly.
me a note, or I just have my new website, but I used to have a free link, and basically I just send people a copy on the book.
Yeah.
And the same book that you have.
Yeah. And it's definitely a good read because I realized, so here's my question, okay, because the advertisement that I saw for this meeting was for high net worth individuals, right, as opposed to newbie investors. And so my question is,
yes,
okay, so for seasoned investors, okay, should we be diverging into the US now, or keep our portfolio in Canada and only just focus on the Canadian market? Because right now we're seeing a lot of stresses happening in the US, and a lot of times we're like, stay in your backyard, and our backyard is Canada, right? So is now a good time to start buying in the US, or should we just focus our attention in Canada?
No, it's okay.
And I know.
Keep talking. Shit.
Thanks for the question. I am so I'm in Calgary. So you're in Toronto. You're in the GTA area. When I tell investors to start looking at US, number one is always good to look at US, whether you're going to do it in US or not. It's really just comes down to the numbers, to be honest. Canada is 35 or 30 million people, and US, one city is 30 millions. We talk about 10 times the market of Canada, and I know in the United States, we have one state, let's just take Ohio. One state is 12 million people, right? And can you hear me? I'm just gonna mute everyone else. Mute all. So I just mute everyone, and it's gonna take some time. Can you hear me now? Yes. So you still hear me okay, right? Okay, that's good. So the biggest thing is U.S. is 300 million people, and Canada is just 10 times smaller. And in terms of market, in terms of occupancy, in terms of just in general, like, when I go to US and I'm able to find properties right now, still it hasn't changed that much. And we can find property that is like really underpriced. And if I have to put the numbers, it's basically you can find 10,000, 20,000, 30,000 per unit. I'm talking per unit. We're talking apartments and invest. And in Canada and Canada, really have like 4 or 5 different markets. You have Toronto, you have Vancouver, which is, you talk about probably 10 times of the price of that 30,000 per unit. And I know that I'm always trying to sing in with people coming from the east and the west. It's really hard to imagine that. Well, by the way, I invest in Hong Kong. One properties can cost like 2 million in Hong Kong, and just like basically in Toronto and in Vancouver. My question is always, I'm a cash flow guy, and times like this, whether you are multifamilies or like just single tenants, single houses investors, is really hard to cash flow in market like this. In fact, I guarantee you're not going to cash flow, right? I know, because I invest in China myself, and I have properties, real estate properties in China and Hong Kong. those market is really hard to cash flow. You just can't cash flow. So when I say that investing is really for the long term, is basically designed for time like this. Time like this when the real estate market will correct 20 to 30%. I don't know, but let's say that it will. And how do you keep on paying the debt services, right? How do you keep on? I'm going to be unmute you. How do you keep on paying the mortgage? How do you keep on if you're not cash flowing? Let's say now if the government is not doing what it's supposed to be, not putting $1 trillion, the bank is not deferring your mortgage payment. If your tenants move out because of the economic situations, is basically you're going to be stuck with mortgage payment and expense for let's say even a year. So that's what we talk about. So when I say is it good to invest in US? It's not really about investing in your backyard or not. It's really investing in the market that actually can cash flow. Does it make sense? So if the market doesn't cash flow, it's you really hoping the market continuously going up. And well, don't get me wrong, the interest rate has been going down to zero, for if you get a mortgage like 2, 3, 4%, if you're talking about commercial or residential, it's really good. But you really have to sink in if the market is not cash flowing. I mean, if the property that you're investing in the market is not cash flowing, it's really, is a big risk for your investors, for yourself, that if you're not cash flowing monthly, month out for just like my apartment building in Ohio, and it's time like this is really, really hard. My apartments will still cash flow and pay the investor if it dropped to 70% occupancy in the US, right? And that's, I just leave it to you because that is what it is, Chad. So that's what it is. If that's why I'm looking at US, because the market in US, you have a much bigger market and you have much cash flow opportunities. And that's why I always tell people, you may not want to invest in US, but don't stop looking at why people invest in US and check education.
Okay.
Just gonna unmute you.
All right.
Does it make sense?
Yes, that does make sense. Yeah, one of the reasons why I haven't invested in the US up until this point and started looking at it is partly so that I can stay in my backyard, just to support the Canadian economy, but also because the US dollar is at 28 cents on the dollar, right? And so we're spending more Canadian dollars to buy the same property. So even though it's on sale in the US, by the time we do our conversion on the dollar, it's more expensive. Right, but also to the third reason is that I've got a client who's asked me to invest with her in the U.S. now, right? And I've never had that before, right? So there was never any, additional like a personal reason for me to
connect it. We should connect it, and we should connect it. Like if you on that note, if you need information on U.S. investing and apartments or single family, we should connect it.
Okay.
Feel free to reach out to me. That's what I'm saying.
Okay. All right.
Yes. Yeah, because I would like to explain that on your point is like exchange it. Right now is actually even worse. And that's actually another reason why I invest in US. My investment in US actually has to go up right now because of the dollars, right? You talk about the dollar, like I go into US market 2012. And that was 1-to-1, and right now we're at 1.1 to 1.4, 1.1.3, and this actually has to go up. So my feedback to you, or my feedback to you is, my investment in US actually go up, not only because the real estate market has in terms of cash flow, but it's also when we look at US, the Canada dollars, we're not going to get into too much of a political reason as in why a government is like, the dollars or Canadians is not strong, but it has not actually do us any good to, to be honest, to keep my money in Canada soil. Because, quickly short is like, as soon as our oil is at $20 or $25, our dollar is going to keep on this 1.3 ranges. And it's not going to go up. It's not going to go up, and when you mentioned 1.3 conversions from even when you trying to invest in US, and that's really easy to explain. Even with that exchange rate, it's really hard to find property in that price in Canada. It's impossible. It's impossible. That is the reason why I invest in US, because you buy way more and you get way more cash flow, and the dollar is much stronger.
Okay. Okay. Awesome. Got it. Got it. Thank you, Howard. I appreciate that. That was the first time that anybody has ever explained it to me. So from the exchange rate, that if the dollar is low on, if the exchange rate is low, that there's a potential to make more cash in return on your cash on the exchange, as opposed to just the cash flow on the property. So that's really good. I have not thought of it in that way before. Okay.
Because
Howard
yeah, and
Huang,
because
can I?
it's, you know, hi, Colin, how are you? Hi.
Hi, Howard and Huang. This is Gail.
Yes.
I just
go ahead.
wanted to interject and ask a question. I'm a
Yeah.
real estate broker in New Jersey, US, 37 years in the business, okay? I've done investment real estate
Hi.
my whole career. Are you using a syndication when you come into the US to pool money and cross state lines and buying your property? Because there's a lot of legalese. And we're, my business partner's on the call also, Lorelei. We're putting together a real estate syndication as we speak because of the Securities Exchange Commission in the States. They're very, very key. But I would assume you're using a syndication to buy these properties, aren't you, Howard?
Yeah, you really have to be, yes. The answer is yes. And
Okay.
you have to be really careful when
Yes.
you're trying to create a relationship, because your SEC or ASC or ORP requirements, and you're absolutely right. You have to be either going to be talk to accredited investors, or you're going to be, if you're talking to the general public, you will have to have the existing relationship with your investors. And you're hacking really right, because you're right, because you have to be, and that's why on the first meeting, a lot of people, when I say that go out and raise capital, I don't mean, I do not mean, I say that again, I do not mean, when you're meeting a person on a coffee and first time and say, I have this opportunity. I'm not saying that. And I do not want you to do that. And because you really have to be in existing relationships, and you cannot talk about specific in terms of the returns and things like that. So you have to be really careful. And thank you for mentioning it, Gail. For some of the newer guys here, I think that that you can do that. I have been raising capital in the Canada and also US. The rule is very similar, but it also have its own differences in terms of doing it, even on the province to province level, actually, in Canada. And because Canada real estate security. So US, so I'm going to be mute all you guys. Mute all and then continue. So then you on the Canada front, and the Canada front, every province doing its things, meaning that Ontario have OSC doing its requirements and logging in terms of checking on investors, whether they can actually go out, and how can they actually go out to raise capital by itself, has its own rule, and same as every other jurisdictions on the Canada front. So in US is really is one SEC rule that you have to abide and you have to follow. And yes, and you really want to, and if you're not familiarized with the rule, and I would strongly recommend you to talk to some of my lawyer friends, or some of my, even myself. I'm not a lawyer, but I've done some, and I'm willing to.
Yeah, I would just like to add,
So does it?
if anyone's investing here in the States, they should really get a securities exchange attorney, someone that specializes in syndication, because the rules have changed quite a bit. The 3-touch rules with trying to, develop a relationship. You've got to be registered in some of these states. It depends on what type of syndication you're putting together, how you're investing. If you know people for a long time, it's a little bit different, because then you're doing a joint venture. But, there's some hefty fines that go along with this. And, you know, like I said, you know, we're involved in putting a syndication together right now, Lorelei and I, and it's quite involved. And, you know, if anybody needs some assistance or whatever, we'd be happy to, you know, get involved. We're both here in the US. She's up in Massachusetts, I'm in New Jersey. We'd be more than happy to help your group in any way we can with connecting them with some SEC attorneys or, you know, anyone that can help. So just want to offer that out. I'm new to your group, Howard, and I'm appreciating you providing the information to people. Thanks a lot for all you do.
Thanks for joining, you know, and you had it really nailed on, and you have to be, and that's why I mentioned this. You have to be pay attention, but you know, paying attention doesn't mean that you can stop. You cannot not doing it. In fact, that's the things that I was looking at. If you don't know, if you're seeing a lot of investors doing it, I encourage you to start thinking of how they're doing it and learn about how they're doing it. And what Gail's talking about, get in touch with SEC lawyer is definitely the first steps. And they can tell you what you cannot do and what you can do. And yeah, so thank you, Gail, and say hi to your business partner as well. So any more questions? If not, I'm going to call it that's it. But thank you very much for all you guys joining us on this meeting. I'm really grateful to you know, to share some positivity out there, because you know what, the market is so fearful, the market is so scary, but you know what, I do think that's the best time that you should start learning it, educating yourself, and you know, and doing the education research, and go talk to. Raising capital doesn't mean that you're gonna get the capital right now, you know, by the way, meaning that you start the conversation going. Because if you have raised capital, and if anyone have raised capital, one thing you know that it's going to take some time, and if you need help, as in what you can say, and what you're talking about, what you can say and what they, and that's help out there. And I'll be glad to connect you to Gail, or connect with other people, who are lawyers and SEC lawyers and the security lawyers, SEC lawyers, whatever that is, and to help you to you know, go through that conversation, preparing the packages, and just say the things correctly. And if not, then I would end this meetings, and I wish you all well, and stay healthy and stay positive. And that's, I think, the best thing is stay positive, stay healthy. And I will see you guys all on next Wednesday. Ciao.
Hey, Howard, just I see that you're still on the line. Can you hear me?
Hey, yeah, I'm still online. Who is speaking with?
Hey, Aaron.
Hey,
Here's
Leo.
Is
Hey.
it James? Yeah.
So,
Hey, Leo.
so
Hey,
Leo
Leo, how
brought
are
me
you?
in.
Hi. Yes. Who? Sorry, I'm just gonna unmute. This is only a few.
Hi, Howard here. So Leo, actually, that was Aaron, my friend, talking to you.
So,
Do you hear us?
yes.
Hey, everyone. Go ahead.
Hey,
Go ahead.
thanks for hosting this. I have just a one kind of big question. A lot to learn from me from my end, but good knowledge, good insight from you. I wanted to know, besides the SEC Securities Exchange attorneys, and I'm not sure how much you went into. I missed the first 10, 20 minutes. I was in another meeting. For the accounting aspects, the reporting income and whatnot, which would you say is a bigger part of your mastermind team or your real estate team, the accounting or the attorney? Like, because prior to your deal, you need to understand how all that money will be handled, right? And how all that profit's handled. So would you say an accountant's more important, someone that knows both sides, or the attorney?
You know, that's no, so if you are new on, forget about apartments. We talk about syndications, we should talk apartments here. Forget about apartments. As a Canadians, what you're talking about is really how do you raise capital. First of all, you can raise capital in US or you can raise the capital in Canada or both, right? That's different, first of all. And you have to be basically, this is not so much of, or my question is basically for yourself. You have to ask yourself, are you going to raise capital in Canada or in US? If you raising in capital in US, you have to obviously abide by the law from US. Of your people, your investor, if they're US residents in US citizens, then the rule is going to be more catered to understanding, respecting the law on US front level. Now, if your investor is on the Canada front, you have to respect the rule of raising capital on the Canadian side, and we talk about different things here. But my experience is the hardest part is actually not really on the structuring part. The structuring part, you can, when you're structuring deals, Gail's talk about, going through all the structurings. It is tough, but you get the right SEC lawyer, you get the right security lawyer in Canada and US, you can get all that ironed out, and that's not the issues. The issue is actually how do you we talk about raising capital. The biggest part is not so much on the structuring of the deal, but it's more on, two things is actually, can you find a good deal? And second of all, can you raise the capital? And that's marketing involved in all that. So, but the hardest part, like I would like to, direct it to you, is the hardest part is actually not talking to the right accountant. The hardest part is actually not talking to the right SEC lawyer, because you can basically talk 10 of them and 5 of them, and you can screen them out and you basically figure it out quickly.
Okay,
But they are,
sounds good.
They are, whether they're good or not, to be honest. And that's not hard. Very good.
Sounds good. Thank you.
Yeah. So thank you for you guys and come join us, and we'll see you guys next Wednesday, and keep the positive.
Will do. Thank you.
Bye.
All right, thank you, Howard.
Hey, Leo. Hey, thank you, Leo.
Hey.
Thanks for coming.
Oh,
How is everything?
I'm busy writing one of the marketing piece right now. Honestly, I was on here because I don't know if you might be here or may not be here. I just want to introduce you to Howard. So I totally didn't listen to him. I was writing this marketing piece. Sorry about that. I'm doing good. How about you?
I'm good. I'm good. It's
Oh,
it's a crazy world out there, but yeah, we just have to focus on the on what we can do. It's everyone's staying at home and trying to find normal, and what we can do is keep pushing it. And I think no one's actually know what this. Keep pushing it, right?
Oh, sorry, Howard. I thought you left.
No. Okay, I'm gonna end this. Okay.
Okay,
you have a good one.
Yeah, you too, man. You too. Bye.
Okay, bye.
Oh, hi, Aaron. I'll open another webinar so we can talk. I'll send you the link.